Q2 earnings season is underway whilst I've been away on vacation. We've had companies reporting earnings that have generally beaten analysts' expectations, both on the top line, EPS, and the bottom line, revenue. We also had a market sell-off, followed by a rebound. And if you look at the headlines, it looks like the media put this down to the Delta variant concern, which impacts economic growth. Now have a look at this headline. 24 hours later, headlines come out suggesting economic growth concerns have eased. All of a sudden, overnight. What this suggests is the media have no idea what's driving this movement in the market. 1 minute high yields are an issue, the next minute low yields are an issue. This is why, as traders, or as a trader, it's important to focus on the technicals and look at what's in front of you, price. That's why I tend to look at the charts and I try and block out outside noise or misleading headlines that can lead to bad trading decisions and lead to losses. With that said, let's get straight into the charts. Now I want to start with Virgin Galactic. So Virgin Galactic shares jumped on Monday following the successful flight on Sunday the 11th, which had Richard Branson on board. Now price touched just under a penny shy of $60 in the pre-market before this stock pretty much fell back down to earth like its owner. This was on the news that Virgin Galactic would sell 500 million worth of shares, and you can see the reaction looking at the chart. Once the key moving averages were lost, the 40-day in the blue dotted line and the 20-day in the red dotted line, the next spot of support was 31.90. We got as low as the 200-day where the price is looking to base. Now in my view, space has lost some momentum here since that announcement, and I think a couple of things need to happen for this momentum to really change. Firstly, price needs to try and rebuild from here and begin to reclaim some of those lost or key levels that were broken. So first up would be 31.90 followed by 35.90. Secondly, and this is the key date, Virgin Galactic reports its earnings on the 5th of August. Now this will give investors and traders more clues as to how much of that 500 million share sale has passed. It's very likely the sell-off in price has been down to the selling of the stock by the company, but how much of that will be key, and that will impact momentum of this stock going forward. You also had Jeff Bezos go into space as well. That might also have had a slight negative impact on the stock. Now I'm talking purely from a trader point of view as we look at short to medium term opportunities. If you're a long-term investor in Virgin Galactic, I still think this is a good buy and hold for the longer term. And this was one of the headlines that came out where UBS says space tourism could top 4 billion in market value by 2030. So you can see there are banks on the street out there that are also bullish in this sector. Then we have Viacom Cbs. Now I talked about this in the previous video about how a close below 39.50 would be a negative. On the 19th of July, price got close to this, but managed to close just above the 39.50 level. Since then, price has drifted higher, with key moving averages likely to act as resistance. Price remains in the channel between the rising blue trend line and the 200-day. The key for this stock is getting a clean break above the 200-day, which currently sits around 44.58. In terms of fundamentals, this headline came out suggesting the CEOs of Comcast and Viacom Cbs had met recently to discuss a potential streaming partnership for international markets. Now that's one thing to watch out for. The rumor mill will continue, and that could build momentum and push this stock higher because there has been a lot of M&A in this streaming service sector. The other thing to watch out for is Q2 earnings. Viacom Cbs releases earnings on the 5th of August with the expectation of 96 cents per earnings per share. Let's now talk NEO. So NEO has been an interesting one as it had another attempt to break the 200-day to the downside. Look at what happened on the 19th of July when the market sold off. NEO actually put in a bottoming tail as bears capitulated with price shooting back above the 200-day. Now a bottoming tail like this is usually a sign of a reversal, and sure enough, price has reversed course with it now being above key technical moving averages. Also look at how price has come back to retest a breakout, where price is looking to hold the rising trend line in brown. Here's a view of the weekly chart. Look at how price has reclaimed the trend line that price had broken out of. This is also a bullish flag pattern suggesting more upside to come. If you want to know more about bull and bear flag patterns, I've got a free training video that you can look at in the description box below. I also want to show you guys the Tesla chart, which is very similar to that of NIO's, if not more bullish. This is the weekly chart. You can see how price retested the breakout area here and managed to hold the trend line. As long as that trend line holds, Tesla will head higher. Finally, let's talk Goldman Sachs. So since the break of the uptrend that stretches back to November last year on the 17th of June, price retested this trend line twice. Once around 30th of June / 1st of July, and the other time was on the day earnings were released on the 13th of July. You can see this here where price topped out. Now the longer this holds, the more likely a sharp reversal in price. I remain bearish on Goldman Sachs, though the way markets have been moving recently, I wouldn't rule out a third attempt at the trend line. What I've actually drawn here is the start of a downtrend in the black dotted line. Now it's possible price comes back to retest that. If that trend line holds, it's around 385, 386. That will then confirm Goldman Sachs is now in a new downtrend. Now those that have been following earnings season will know that Goldman Sachs actually beat analyst expectations in both EPS and revenue. Yet on the day it released earnings, the stock was down. Now why was this? Well, one of the things looking at the earnings presentation, although it did beat on earnings, trading revenue was down year on year and quarter on quarter. And that's not great for an investment bank like Goldman Sachs, which relies heavily on its trading business. You can see here some of the numbers, down almost a third Q on Q. Now if we drill further down into the global markets division, you can see where the damage has been done. Fixed income was down 40% quarter on quarter and 45% down year on year. Equities was also down. So that's why the stock was impacted in a negative way. Even though earnings were a beat on the top line, drilling down into the numbers that really matter for Goldman's is the trading revenue. And if fixed income and equities trading is not performing quarter on quarter, year on year, the stock will go down. With that said, I hope you found this video useful. Remember to hit that subscribe button so you don't miss any future videos, and I'll see you at the next one.